welcome to another edition of Taking Stock. This is the show where we take stock of the week gone by and more importantly prepare you for the next trading week. I'm Sonia, Shenoy, and with me as always is Anuj Singhal. Well, it was a decent week for the market, one in which the markets went up about 0.7%. We reclaimed that 8,300 mark on the Nifty just about by the end of the week, and we had a lot of heavyweight names like Infosys, Reliance, Axis Bank and ITC that powered ahead this week. But of course, it was a truncated week, so the volumes were not very high. Anuj, hi, welcome to the show. It's been, sort of an uptrending market, and one in which you would have made a lot of money if you had bought stocks.
Yes, Sonia, but I think there were 2 or 3 things that happened this week. One is that market got some kind of leadership back in terms of 2 or 3 stocks. Reliance did really well. That stock clearly was your leadership stock. Infosys did well. On Friday, ITC surged, and ITC in fact has done well through the month. So that also was the other big factor. The other thing that happened this week was that the earnings reaction was more positive than negative, especially in the broader market. There was a VIP, there were a couple of other big names that reacted on the positive side. Yes, there was an Inox Leisure as well. Yes, there were a couple of other disappointments as well. But the sense you got was that most of the earnings or more earnings were better than the market estimates, and that I think was the other big positive trigger. Next week is expiry, so the market is bound to have some resistance at 8,300, but if that's taken out, then really this market is looking forward towards 8,400, the 200-day moving average. The good thing is that it's got leadership back. That's always positive news. Oh
yes, it is. So let's go straight across to our guests and find out how you should approach the weeks to come. Market veteran Jyotivardhan Jaipuria and Jai Bala, head of technical and cross-asset strategy at 1857 Advisors, are our guests for the show today. Gentlemen, welcome to the show. Jyoti, I'm going to start off with you. The market has resumed its uptrend in the last couple of trading sessions, and now we're back at the 8,300 level. For a long-term investor, how favorable is the risk-reward ratio currently?
My view is that the next few years are going to be good for the long-term investor in terms of pure earnings. So market is not cheap, market is slightly expensive, I would say. But I think the earnings momentum would be quite strong over the next few years, and that's where most of the returns will be made, because you probably have earnings which will compound at 15% per annum over the next 3 years. So I think it's still a market you want to buy. Probably if you get some dips, it helps you to buy at a lower level. But it's a market you want to buy and hold, because equities probably will still be the best asset class over the next few years.
Okay, that's for the next few years, but what about the next few weeks? Jai Bala is also with us. Jai, hi, good to have you on the show. So is the correction well and truly over, and do you think the market is now headed higher from here on?
Yeah, thanks for having me, Anuj. See, the market is doing a lot of positive things. It's like we had said, when the market was recovering from the lows of 7,600 and below, we said the market is likely to rally close to 8,300. It has done that, and the next step to this is that we don't want to see pullbacks that go deeper than 8056 on the Nifty. If it does that, I think the market structure will reiterate the positive that it's already saying. But we have to do a reassessment only if the markets were to go deeper than 8056. So we don't want the market to do that. And the next step for the market to reiterate that it's going much higher is that we want a couple of big updates to come through in the next week. If it does that, it will corroborate the fact into the structure that we are interpreting at this point of time, and the market is likely to head to record highs, which we've been saying is likely to come through, because we have been saying for a long time that the correction that started from February is just a correction within the longer term uptrend. So we want the markets to see big updates in the next week, and if there is a pullback, we don't want it to go below 8056.
Okay, Jyoti, the clear tectonic shift in the market has been in terms of fund flows. We have seen FI inflows come back in the market over the last many days now, and that's been a global trend for emerging markets. Do you think the liquidity factor alone is going to be enough to take market back near the all-time highs?
Yeah, see, part of it has just been global, so there was like a lot of worries in the market, and part of that have got erased. India's up 10% from its lows, around a month back, and most emerging markets have done something similar. I think, from now on, we probably will have a bit of breather in the market. You'll have a bit of consolidation for the next few weeks before you see, the year-end rally play out. where, you know, you got the additional spurt was, you know, the ECB joined the party saying that they are really going to infuse some more QE into the economy. So to that extent, you know, you had first the Fed not really raising rates, and the signal became that, okay, you know, the Fed hike is probably off the table, and then you had a QE come up. Now the onus is now back because the market's gone up already. So now you need to keep getting those positive news. Otherwise, my, you know, broad sense would be that we are in a consolidation phase. We'll probably see a bit of pullback coming in the market and probably flattish to slightly down markets near term.
Okay, but you know, Jyoti, we have seen a lot of leadership resume in this market. So, you know, names like Infosys, Reliance, ITC, HDFC have all seen good up moves in the recent past. For a long-term investor, since you do believe that the risk-reward is favorable, where should you be putting your money now?
Yeah, so it's very interesting because some of the names you mentioned were things which were all laggards for the last few years. So the good thing is you're starting to see some of the laggards perform well, and all these stocks went up because the earnings was good in them. I think that's what you're going to see over the next 3 years. My view is that, you know, if you take the last 5 years, you should have probably bought tech and pharma and the private sector banks, and that is what made you money. The next few years, you probably will see some other sectors also do well, like I'm very bullish in autos, cement, and I think industrial names will also do well. So I still like the banks and the industrials, and I think, you know, autos and cement would be the other sectors to do well. So these are 4 sectors which I think will do well. Essentially, it is, I think, the domestic economy, the rate sensitives will do well rather than the exporters which did well over the last few years.
Okay, so the domestic economy driven stocks will do well. Bala, same question to you. From the auto and cement space, which are the stocks that you would be recommending? Because this week we did see, or rather in the week gone by, we did see some resumption of activity in some of the two-wheeler names like Bajaj Auto, Hero MotoCorp, etc. Between these two spaces, if you had to trade some stocks, which ones would they be?
Yeah, the auto sector is very key to the overall health of the market, and you know, we have been bullish on Bajaj Auto, and that's continuing to do well. I think record highs are due for Bajaj Auto, so that will be my top pick in the sector. Within the cement space, I would rather go with mid-cap cements rather than frontline cement. You know, I've given the names like JK Lakshmi and Mangalam Cement as my top picks within the sector, and we continue to be bullish on these names. And you know, it's important for the you know, auto sector to take leadership. Because that's been the leader since 2009, and the structure also is pointing to more highs to come through. If you look at Tata Motors, which was struggling the last few months, I think from a very long-term perspective, I think the low it put in September is a very important low. I don't think it's likely to go below it, but it's not yet clear it's going to record highs. But you know, it's going to have a very good reflex rally, and the current uptrend that we are seeing the last couple of weeks, I think that's likely to continue after a short pullback.
Jay, 2 stocks which really contributed land share to the market's gains, Infosys and Reliance. What are charts indicating now?
See, the IT sector is a problem space for me. I think from the interpretation that I'm making at this point of time, I think the IT stocks are going to chop around between the February highs and the September lows, barring Infosys. Infosys is looking positive. I think even there is not a big upside, but there is an upside. It will probably go somewhere close to 1300 to 1350. But rest of the stocks within the space is a problem area. It's not yet made up its mind. The sector as such hasn't made up its mind. We want you know, further clues from the market. But if you have to be positive within the IT space, it's going to be only Infosys. Coming to Reliance, I think Reliance is doing a very good job. And you know, if we try to continue this uptrend for the next couple of weeks, I think we are looking at big upsides for Reliance. But it's too early to take position and interpret the market that it's going to make those record highs that I'm talking about. But we want the markets to, you know, tell us what it's doing the next couple of weeks. Once it does that, we can have a strategy for Reliance. But it's looking positive. The price action has been positive for the last couple of weeks.
Okay, stay on, gentlemen. We need to take a short break. We'll come back and chat about many more stocks. But in the meantime, let's listen in to some market opinion that we heard through the course of the week.
If you look at e-commerce, which separately, whether it's highly valued or not, is definitely a very massive negative on traditional, say, retail sector. Or if you're doing so many home delivery businesses, it is a negative to the current options that you have in home delivery. Or if you have solar energy globally coming down in prices, over time, I think the value of these utility companies, coal, reserves, things like that, are all going to lose value over time. So, not only in the short term because of the fact that one part of the economy is not doing well, but in the long term because of these new technologies, the overall confidence that you will have in, say, 10-year and 20-year stories will be reduced.
My sense is from 8,000, the downside is limited. I mean, yes, it can go down to 7,500, 7,200, whatever, 8-10%, but it will bounce back very quickly. So, at around 8,000, I mean, for the long-term investor, there is very little to lose, and someday this story is going to happen, India's story is going to happen, world story is going to happen, and on a 3-year basis, I'll be surprised that will not make a decent money. And in any case, the stocks are different from the markets. So you are buying stocks, not the markets.
I think we are approaching a level where there is a lot of resistance overhead 83, 8400 levels. So you'll need some more good news for the market to cross these levels. That risk of 75, 76 is there only if again there's a lot of panic in the global markets, which could happen probably only if the US again were to think of increasing interest rates very shortly. So I think for the time being, probably you are in a sort of a range, maybe 8,000 to 8,400, and then you'll have to take it up to that.
On a broader market basis, I think the upside is somewhat limited from where we are. If I look at the Nifty 50 index, for example, that is already trading at almost 16 times on a March 17 basis now. So further scope for rating on a broad basis would be somewhat limited. I don't see how this market can move up significantly from where we are. So just a question of valuations and what kind of reward risk balance you're looking at current levels, given the fact that we're not seeing too much of news flow on the reform side. The earnings season, you have not seen any great surprises. Thankfully, there have not been any great disappointments also, but it's not as if we are seeing any great upgrades to our earning numbers for now.